What if everything you thought you knew about your favorite crypto was wrong? What if a looming storm, brewing right under our noses, is about to unleash a devastating cascade? We're talking about a potential 30% collapse, triggered by a hidden pattern and a surprising betrayal at the highest levels. Today we're pulling back the curtain on Cardano, and what we've uncovered, it's not pretty. This isn't just about price action, it's about the very foundations of the ecosystem. Get ready, because what I'm about to show you could be the most critical information you hear about ADA all year. For years, Cardano has been hailed as a blockchain titan, a beacon of peer-reviewed research and methodical development. We've watched it climb, we've seen the promise of its scientific approach, but something has shifted. The air is thick with unease, and the charts are screaming a warning that many are desperately trying to ignore. Look at this. As of today, June 20th, Cardano, or ADA, is trading around 57 to 60 cents. That's its lowest point since April 25th, and a staggering 55% down from its peak this year. It's not just a dip, it's a consistent 6-week losing streak. While Bitcoin soared to new all-time highs, Cardano went the other way. Why? That's the million-dollar question, and the answers are deeply concerning. Our expert analysis reveals a highly ominous chart pattern forming on the weekly timeframe, a rising broadening wedge. Now, for those of you not fluent in technical analysis, think of it like a megaphone. The price swings wider and wider, forming higher highs and higher lows, but it's fundamentally a bearish reversal pattern. It often signals increasing volatility and, more often than not, a dramatic breakdown. We saw ADA peak at $1.31 back in December during that initial crypto rally, but then it reversed course. Now, it's trading below the critical 50-week exponential moving average, a clear sign of weakening momentum. And if you look at our oscillators like the commodity channel index and the percentage price oscillator, they're all flashing red, pointing squarely downwards. The technical indicators are aligning, painting a grim picture. But the technicals are only half the story. The real drama, the potent catalyst for this potential crash, lies in a saga that has been unfolding behind the scenes for months. I'm talking about the long-awaited, desperately needed, and inexplicably delayed Chainlink integration. Think about it. Chainlink is the undisputed king of oracles. Oracles are the bridges that connect real-world data to the blockchain, making decentralized apps truly functional. For Cardano, integrating with Chainlink isn't just a nice-to-have. It's crucial for expanding its decentralized finance ecosystem and truly unlocking its potential. It would bring a flood of new possibilities, not least of which is the Cross-Chain Interoperability Protocol, or CCIP. Imagine Cardano finally able to seamlessly communicate and interact with other massive chains like Ethereum and Base, unlocking liquidity, unlocking innovation, unlocking everything. This is what the community has been clamoring for. Charles Hoskinson, Cardano's founder, has been pushing for this integration since December of last year. But here's where it gets truly bizarre, truly frustrating, and frankly deeply concerning. In a recent video statement, Hoskinson himself expressed his bewilderment.
There seems to be like two factions within Chainlink. So there's the leadership of Chainlink that I'm friends with and I know very well, like Sergey Nazarov. I even have his personal number. And we always get along and we never have any problems. We serve on panels together, and every time we talk, we always say we should do more together. And then there's the business side of Chainlink where we say we'd like to integrate, and they say we'd like to do that too, and then it just never really goes anywhere. And I've offered numerous times to say we will personally spin up a dev team and have that dev team actually do the integration. And they're telling us there's now some sort of like integration library that's on the horizon, similar to like Coinbase with Rosetta, where it's self-serve. And whenever that comes out, then we'll just do that, and then I think we have the integration.
He said, and I quote, "There seems to be two factions within Chainlink. There's the leadership of Chainlink that I am friends with and know very well. And every time we talk, we say that we should do more together. Then there is the business side of Chainlink that say they would like to integrate, and it never goes anywhere." Two factions, a business side that says they want to integrate but never delivers? This isn't just a minor hiccup, this is a foundational issue. It raises questions. Is there internal resistance? Are there competing priorities that are actively sidelining Cardano? Whatever the reason, the consequence is clear. Cardano is being held back. It's an island in a sea of increasingly interconnected blockchains, and this lack of interoperability is a massive drag on its growth. And the numbers confirm it. Cardano's decentralized finance ecosystem is struggling. Its total value locked. The total amount of assets locked in its DeFi protocols has plummeted by 30% in the last 30 days, sitting at a measly $330 million. For context, its stablecoin supply is just $30 million. Compare that to other major chains and it's a stark reminder of how far Cardano still has to go in attracting serious liquidity and development. This isn't just a price drop, it's a crisis of utility. So what does all of this mean for your ADA? Let's get to the cold, hard numbers. Our analysis of this rising broadening wedge pattern indicates a clear downside target. The critical level to watch, the line in the sand, is 51.6 cents. This isn't just an arbitrary number, it acted as a strong support in February and April, even forming a bullish double bottom pattern back then. But if Cardano breaks below this crucial 51.6 cent level, it confirms the bearish outlook. It confirms the breakdown of this ominous megaphone pattern. And if that happens, buckle up, because the next major target, the lower side of this rising broadening wedge, is 40 cents. Yes, you heard that right. A potential 30% crash from current levels. This isn't fear-mongering. It's a technical projection based on a well-established pattern combined with significant fundamental headwinds. Now, before you panic and sell everything, here's the nuance. In most cases, after hitting the lower boundary of a rising broadening wedge, an asset does tend to bounce. So, a potential scenario could be a sharp drop to around 40 cents followed by a bounce back up. And where could that bounce take us? Potentially all the way back to last year's high of $1.31.5. That's the hopeful scenario, the classic rebound after a major capitulation. However, and this is a critical however, if Cardano fails to hold even the 40-cent level, if it drops below the lower side of that wedge, then this entire bullish rebound scenario is invalidated. That would open the door to even deeper pain, with the next significant support all the way down at 27.3 cents, the lowest swing we saw back on August 5th. This is a pivotal moment for Cardano. The combination of technical weakness, the ongoing Chainlink drama, and the struggling DeFi metrics paints a picture that demands extreme caution. We are facing a critical juncture, and the next few weeks will determine if Cardano can find its footing or if it's heading for a much deeper correction. Before we wrap up, a crucial disclaimer. The information shared in this video is for educational and entertainment purposes only and should not be considered financial advice. The cryptocurrency market is highly volatile and speculative. You could lose a significant portion or even all of your investment. Always do your own thorough research, consult with a qualified financial advisor, and never invest more than you can afford to lose. Past performance is not indicative of future results. What are your thoughts on Cardano's current situation? Do you agree with this analysis? Are you holding ADA or are you looking to buy the dip if it comes? Let me know in the comments below. And if you found this analysis valuable, hit that like button, subscribe for more in-depth crypto insights, and turn on notifications so you don't miss our next urgent update. The crypto market never sleeps, and neither do we. Stay safe out there, and I'll see you in the next video.